The bond market took a huge hit today, sending mortgage interest rates to a 14-year high. As of today, the average mortgage interest rate shot up to 6.28%. And the last time we had a rate this high was in June of this year. Now, additionally, this was the same time that the housing market began slowing down. Think of it like this. At 6.28%, homebuyers are now paying almost $700 more a month than they would have in January of this year on a $400,000 purchase. The rising rates mean fewer potential homebuyers as they simply cannot afford these higher mortgage payments. A worse than expected key inflation reading on Tuesday cemented expectations that the Fed will be forced to deliver a third straight 75 basis point interest rate hike at its policy meeting next week, with investors now predicting the central bank will have to hike rates faster and further than previously thought. Hello and welcome to Ask the Lender. My name is Rod Ferrier. I am a licensed loan originator in Virginia and Maryland. I'm a U.S. Navy veteran, and my objective is to help you or someone you know be up to date on what's going on in the housing market. Investing in housing is a classic way to gradually build wealth, either as a homeowner or a landlord. And generally speaking, it's a sound strategy if your local economy's fundamentals are decent. Before we dive further into this breaking news though, please do this channel a favor and subscribe, making sure to click that bell right there to get notified when new content is published, and share your thoughts below in the comments, as well as pass this link on to someone you know looking to buy or sell a home. Remember, I'm not a financial advisor, I'm not an economist, nor do I have a crystal ball to predict the future. I'm just a hardworking dad who shares information with my audience like you in hopes that you learn more about what is happening in the real estate world. Home prices in the U.S. skyrocketed by more than 33% since the start of the pandemic, buoyed by booming demand from homeowners and investors. Now, in Q3 2022, interest rates have also reached new heights. With rising rates and higher home values, many potential home buyers are reluctant to take the steps to homeownership. Housing starts have steadily increased, until now, but population growth since the pandemic has been close to zero. Institutional investors in housing are now quietly heading for the exits. So what really happened to housing in the pandemic? Instead of a housing shortage or the myth of people moving en masse, the real issue was that from the start of the pandemic in 2020 until earlier this year in 2022, the Fed essentially fixed mortgage rates at 3% by buying almost all of the mortgages issued here in America. Now, this was instead of letting the market decide the interest rates, which obviously would have been the smartest thing to do. Classic economic theory tells you that government price fixing inevitably leads to shortages. And it did here too, as everyone who had ever wanted to buy a house took advantage of cheap mortgage rates to buy the biggest house they could afford. Then some crowd psychology set in, and it was all about YOLO, you only live once, and FOMO, fear of missing out. This was completely unsustainable because the only thing keeping mortgage rates that low was the government actively buying all of the mortgages. Earlier this year, when the Fed finally stopped doing this, mortgage rates went from 3% all the way up to 6% in just a matter of months. You remember that, don't you? And huge price gains in housing values plus huge interest rate increases mean that the number of buyers who can qualify melted like an ice cube in July heat, working to reverse price increases by brute force. Now, inflation is hitting 9% earlier this year and has taken away the Fed's quantitative easing ammo. The resulting tsunami of rising rates has quelled the housing market rebellion. Houses are sitting on the market longer. So here's some basic math. With a 3% fixed mortgage rate, a 20% down payment, and a 36% debt-to-income ratio, a household with $100,000 in annual income can qualify for a $721,000 house. Now this was just in November and December of 2021. At 4%, they can qualify for a $649,000 house, and that was March of 2022. At 5%, they could qualify for a $587,000 house. That was April and May of 2022. Now at 6%, they can qualify for a $533,000 mortgage, and that is in September right now. So for roughly 75% of American homebuyers who use mortgage financing, that's a 26% drop in purchasing power since the start of the year. Unless wages come up or interest rates come down, home prices will need to fall a lot. And why not? I mean, if they can rise 33% in 2 years, they can fall 25% or more in 2 years as well, right? I mean, theoretically speaking. So don't get me wrong. I'm not saying that we are headed for another 2008. Rather, I'm pointing out that a correction will happen. Now, how much of one is yet to be seen. Consider this. In a recession, when money is tight, businesses are strapped for cash, and as a result, layoffs occur. That means unemployment rises, right? So about 49% of Americans own or rent a home, while labor force participation is stuck around 62%. And that ratio is very important, but the trend is key here. Labor force participation is shown down since COVID, while housing demand is up. This correlation was about 1-to-1 from World War II until the pandemic. Now these have to converge, because if you don't work, how will you pay rent or your mortgage? Well, you won't, unless you're getting a ton of stimulus and you're making the money in stocks or maybe in crypto, or you can benefit from eviction and foreclosure moratoriums by not paying your rent or mortgage. Now, let's face it, we are in some very interesting times indeed. The housing market went completely out of control during the pandemic, and without the Fed pouring gasoline on the fire, there is going to be a steep correction to restore sanity to the housing market. This has a slew of implications for anyone looking to buy or sell a house, and for investors in housing-related stocks like home builders. Do you have questions, or maybe you know someone who may be looking to purchase or sell a home? Maybe they have questions. Let's connect, and I'll help you find the answers that you are looking for. Oh, hey, wait, before I forget, just a reminder, show this channel some love by subscribing and liking this video, as well as sharing a comment below so the algorithm puts us in front of more people just like you. Appreciate the love. See you next time.